back. You're watching the EFNU show, but we have with us a very special guest, the manager of Shree Cement, who talks rarely. But of course, it's been a fantastic quarter for Shree Cement, and Mr. Bangur is here to talk to us more about it. Mr. Bangur, good morning. It's such a pleasure to have you on the show. We've been trying to talk to you for a while now because the sector, the stock, has been drawing lots of attention from institutional investors as well. But it's been a good quarter for Shree Cement. Despite a decrease in cement prices, particularly in the east and north markets, the volume growth very obviously has been sufficient to sustain a positive revenue for Shree Cement in this quarter, rather second quarter running. Going into FY25 and given the high base, what kind of revenue growth can we expect from the company?
We can expect a volume growth of around 10%, 9 to 10%. And normally, cement price in the year is expected to be increasing by 4 to 5%, little less than the inflation. So overall, volume, but then it depends on prices. So volume growth will be 10%, prices high by 5%, expected revenue growth maybe 15%. But it all depends on price.
Depends on price, and that's so true. I want to talk to you about, just before we go into price and premiumization as well, because I know that's a segment that you've enjoyed and managed to gain from quite well. But I want to quickly get a sense from you about the next 2 quarters. We talked to the likes of an L&T, a few infrastructure construction companies, and they all alluded to the fact that the next 2 quarters could be slow because of elections. But the last 2 quarters of the year will, of course, see a pickup again. Do you feel the same? Do you sort of resonate with that the next 2 quarters may not see such a sharp uptick in pricing or revenue?
Pricing we don't know, revenues we don't know, but volume growth should be very good in the rainy months. Normally, May, June is the bad months. As intense heat is there, people are not ready to work. Cement consumption by workers will be low. After 11 o'clock to 4 o'clock, the working hours are not there. Work starts from morning to 11, then from 4 to later on in the intense heat. So cement consumption is low. As soon as the monsoon comes, heat intensity goes down, consumption is increasing. This is the normal trend. So we don't have any doubt about consumption story. If India is growing at 7%, overall 10% growth of cement industry's volume will be there.
Right, I know prices has been a sore point, and not just for you, but the whole sector at large. In this quarter, what's helped, I believe, is lower raw material cost, a lower cost of diesel, and that's contributed well to your margins as well. I mean, there's been a big expansion on that front. But going ahead into FY25, a lot of that's already in the price now. Are you expecting a further improvement in the nature of your margins or the profile of your margins? And also, I do know that your focus, and you talked about this, where premiumization was something that was picking up. There were richer people from the bigger cities going back to tier 2 cities, going back to their villages and building beautiful homes, and were looking at premium cement. Is that trend still there, and what does that do for you in terms of margins?
Premiumization is a fact. As the economy improves, India is growing from economy of shortage to economy of consumers are the king. Then the better product will always have better margins, better rates, and people have graduated to use better things. So premiumization is a must. We have launched our premium brand, rebranded it in February this year. And after rebranding, it is hardly for 3 to 4 months. It will take 6 to 8 months, but in a very short time, even with a better rate compared to the past premium sales, we are getting almost the same volume. So it is a very good sign. Our brand ambassador, our advertising strategy has worked well. In the next 4 months, this will mature. And premiumization volumes right now are about 13%. It should increase to a higher level in the coming months.
Sir, I think one good thing that's worked for you, and I think a lot of institutions seem to be betting big on, is capacity addition. You want to walk us through what capacity has been commissioned, where does capacity utilization stand at, and whether or not are you going to make aggressive investments into your capacity in FY25?
Yes, we will be investing continuously in capacity, and at 15% CAGR, we will be increasing the capacity for next 4 years. 80 million ton plus will be the capacity in 4-year time. So India will be needing the capacity. Somebody has to put the greenfield plant. Only changing hands will be good for the company, but for a country as a whole, new capacities have to come. So we are investing in new capacity continuously.
I know you meant,
And
right. Please
yeah.
continue.
And as far as the costing and the margins are concerned, basically the cement prices are stable. In a year, they will be moving up by 4 to 5% only. When we see the yearly average price, this will be the trend every year for last 10 years or so, little less than inflation. So price hike will be there. Sometime in one market, sometime it will come down. After all, it is a commodity. Average price, this is what is expected.
5%
Cost-wise,
price hike is what we are
right.
expecting. Sir, we're sadly out of time, but one last quick question I want to ask you. Your margins came in at 26.5 this quarter. Is that sustainable going into FY25, or are we looking at a little bit of weakness on the margin front from what you've posted this quarter?
Margins we will not be knowing. We will say it depends on the cost, which is primarily diesel cost, which is transportation, then coal and energy cost, power. It will depend also on the sale rate. None of which we know for tomorrow what will be there. But our efficiency will increase, our machine utilization will increase, fixed cost will come down, that we know. So margins are expected to remain strong. This is not a one-off quarter. That is all I can say.
Fantastic, and the stock is getting rewarded. Mr. Bangur, it was great talking to you. We'd have loved to chat with you longer. We'll hopefully try and get another spot with you over the next couple of weeks to understand more about what's happening at Shree Cement and at the sector. But good luck and congratulations once again. Well,
Thank you.
was the management of Shree Cement, Mr. Bangur himself, quite a significant voice in the sector, telling us about what he's expecting. And the good news is that 26% margins is expected to sustain for Shree Cement going ahead. The stock is off the day's high point, but still not doing too badly. We'll take a break on that note when we'll wrap up this edition of F&O's show. A lot more on the other side, so stay tuned.